The president is in the house. So Zach Abraham, Chief Investment Officer, Bulwark Capital, friend of the show and sponsor of the show. And Zach, he's there. He's there. The president's there. Is the stock market through the roof? Is everything solved? Is our financial worries over?
I've brushed a lot of these things. I brushed several of these things aside because I just thought they were jokes. And then I saw them pop up a couple more times. And there are legitimately liberals out there trying to troll conservative accounts going, why are eggs still high? And you look at them and go, well, are you seriously? Can we have 72 hours in office, please?
I know.
I'll tell you what, man, Idiotville is chocked full. There is no vacancy. But no, I think a lot of the stuff that's rolling out is good. The stock market is, it's hard for me to explain what's going on. I don't really know. Obviously, it's bullish action. You got new all-time highs on the S&P 500 today. Whether it's right or wrong, I guess we'll find out. But this market clearly is continuing to turn a complete blind eye to anything that is not exorbitantly positive. Another really interesting thing is happening right now. I don't have an explanation for it, but I think a lot of investors would agree that the action of this market, the rhythm of this market, the valuations of this market, the way that it works, it's been very odd compared to history for quite a while now, right? And it's getting weirder. So, we've talked about valuations being out of whack, but now, like on our show today, we were talking about how long, small caps and value have underperformed the S&P 500, right? And whether you agree with that outperformance level or not, you can look at the earnings of both indexes and the companies in them. And again, it doesn't justify the earnings. I think they're still the gaps are way too wide, but you can see a reason why, right? Like you're like, okay, that makes sense. I may not agree with the valuation, but I understand the gap. What's happening now is you're watching these massive valuation gaps open up between stocks that are actually in the same sector, both in the top 10 of the S&P 500. For instance, it's fascinating to me. So a couple things that I bet most people aren't aware of. Did you know that Google does 85 billion more in revenue per year than Microsoft?
That's crazy. That's not a little bit. That's a lot of scratch.
That's a lot, right? Now, in addition to that, they have similar gross margins. Microsoft's a little better. They're right around 37, 38. Google's right at 30. Okay. Now, people go, oh, well, Google's a less profitable business. No, Google has a lot more assets on the balance sheet that they are developing that are not generating any positive cash flow, but have cost money, right? Waymo is a perfect example.
Oh, God.
Okay, so Waymo is number one in autonomous driving, right? It is the furthest along in autonomous driving. But here's the deal. Because Waymo is sitting on Google's balance sheet and it has negative cash flow, the only impact that Waymo will have on that valuation is make their earnings look lower. Do you see what I'm saying?
Yeah.
It's not going to show up on the balance sheet and be represented. However, if you turned around and IPO'd a Waymo right now, what would it go for?
Oh, God, it'd be through the roof.
It'd probably be in excess of $400 billion.
Absolutely. I would easily say so. Yeah.
Right. Okay. So you've got a bunch of these assets on Google's balance sheet like this. Internally, I think they call it their home run sleeve or something like that. But they're known for so when you say that their business is lower margin than Microsoft's, that's not a fair statement, right? Yeah. The balance sheets are structured differently. Okay. So in addition to that, Google has 20 billion more in cash on the balance sheet, and they are both growing at very similar rates with one caveat. Remember, Google was later to the cloud business than Microsoft was, so they're earlier in that ramp. Microsoft's later on, right? Well, look what the cloud business did to Microsoft's earnings, okay? So all these things being said, do you know that Microsoft is trading at $1 trillion more in market capitalization?
Really? That's crazy.
It is. And we've looked over it, and I'm using this as an example because I'm trying to illustrate that we're not comparing Microsoft to Chevron.
Yeah.
Right? We're comparing it to another company that's in the Magnificent Seven with it, that's got almost identical growth rates, similar margins, similar sector, similar business, right? All these things, and you got $1 trillion valuation gap between the two of them. And I would just challenge anybody, fill that gap for me and make it make sense. Right?
Well, I don't know if people can. I don't even know if they could, actually. If you gave them the opportunity to tell you why, they'd probably be like, honestly, we have no idea.
$1 trillion, it's a little bit of money.
It's a little bit. That's what I heard.
It's a little bit. This ain't chump change.
No.
So you can just see these valuations all over the place. Flip over and look at Netflix. Yeah, everybody's all pumped up about Netflix. I'm still like, and here's, look, I think Netflix is a really well-run company, right? No knock on them. Looking at I'm looking at the earnings report. Everybody's like, oh, it's a blowout. I go look at the earnings report. Not impressed. They beat on subscribers, but here's the real thing. Like this is a classic market moment, right? Oh, it's amazing they beat on subscribers. Hey guys, the reason subscribers are valuable is because they generally lead to higher revenue. Okay.
Yeah.
If we use the past metrics for Netflix's previous 8-10 quarters or something like that, revenue was half of what it would have been, like what you would have expected based on that ratio of users to revenue. So what does that mean? It means that those new users signed up either on the lowest tier package or they've already canceled something, right? Like and everybody's like, oh, what a great quarter. Look at it. And you go, okay, once again, we can go back to Microsoft, Google. We can pull out several companies. We got companies that are growing right in that same neighborhood in terms of speed, that have double the margins, right? That have infinitely more fortress balance sheet, infinitely more of a monopoly, multiple revenue streams as opposed to Netflix is really only one net revenue stream. And then you'll go look at the valuation, and Netflix is trading at 2.5 times the multiple.
It's a weird time, and people are buying hopes and dreams, and I think that's a lot of what it is. And they're being sold that, and they're buying into it. Talking to Zach Abraham, Chief Investment Officer, Bulwark Capital. What do you make of the whole Stargate thing? Look, I try to tell everybody, AI is the most revolutionary thing ever. I mean, it is the wheel, it is fire, it is all of these things, and I think that people miss. You get a lot of people out there. It's like, well, they're gonna, what are they really doing with this? Look, you and I both know a lot of this crap they're thinking about doing is all behind closed doors. It's all military for the most part. Yeah, the health stuff will be neat, but the reality is there is a lot more to this, and I'm excited about it. Of course, then you've got the fact that you've got Elon out there going, they don't have any money.
So fascinating on the AI thing, real quick. I had a really a friend of mine. Our kids go to school together, and he works for Microsoft, and he's on their AI team. And he was having a discussion with me, and he was saying, listen, the large language models that we were building last November, so 3.5 months ago, they were the equivalent to the human IQ of 87, okay? By the end of December, they were building large language models that were the equivalent of 120 IQ, okay? By today, the end of January, they're at 156. Okay, you're looking at that. It is building so fast.
Yeah,
the IQ of the LLM model has doubled since the end of
November.
Since the end of November. Yeah, it's in November or October. Anyway, it's 2 to 3 months. And what people don't realize about this, there are going to be absolute busts. You got a bunch of stuff running around with insane valuations that it's going to get, they're zeros, okay? And people are just, you're watching idiocy just run amok, and people are financially illiterate and all that other kind of stuff. On the flip side, let's just look at pharmaceuticals, right? If you're a pharma company, effectively what you're doing, and I'm way oversimplifying this, so if you got any like lab PhDs here, please forgive me. But effectively, what you're trying to do is you're just testing as many different compounds as you possibly can and see if you come up with something, right?
Yeah.
Just trying compounds. Okay, well, you got effectively now with AI, you're going to have the smartest researcher in the history of the world that can compute at 1,000th or if not a millionth the time of a human being. And it will work on this tirelessly 24 hours a day,
Yeah.
right? It's going to come up with stuff and combinations that we've never considered. It's going to come up. That same developer told me, he goes, up until the last 30 days, I have been using LLMs to help me code. He goes, now I am telling it what to code and having it code, right?
That right there is, that supercomputer, they did that math equation that was supposed to take, like 27 gazillion years, and it solved it in 5 minutes. And what people don't talk about is the fact that, which I said, look, this may be the greatest thing in history. And everybody's like, no. I said, you don't understand. This thing could never be solved by even a supercomputer. And not only that, it went into other dimensions to gather information, to put the puzzle piece together. We can't even fathom what these things can do.
Yeah. And we're just, so I'll tell you what, if you're despondent or you're dismissive or whatever, if you have any negative, and there's plenty of basis for this, but if you have any negative connotations or feelings toward this, and I'm not saying this should be the preeminent emotion, but if anything, it should be fear, not dismissive, because undoubtedly this is going to take us in directions that we cannot anticipate at this moment. And a perfect example of that is, try if you can to go back 25 years ago at the dawn of the internet and think about how incredibly different and much more transformative it was than we could have ever anticipated, right? When we were getting on the internet, surfing around in that set 97, 98, can you imagine trying to tell us what we'd be doing today and how much different it would look, and how it's not about will we monetize the internet? It's more like, is there anything more monetized than the internet? You know what I mean? Like,
yeah. Oh, absolutely.
So, and like you said, Chad, I don't think you can make enough. I don't think you can make a big enough deal about it. What is puzzling to me are the parts that people are betting on right now. I think there's a lot of really ridiculous bets. I think that it has really exacerbated this market's issue with being a price discovery mechanism, meaning you put all this weird stuff going on with passive and all passive investments and all these things that the stock market has never dealt with. Then on top of that, you're dropping in what could very well be seen in a relatively short period of time, the most significant technological advancement in the last 100 years.
Absolutely.
Right. So I wouldn't expect, I'm not surprised that it's making things clunky and weird, but it is certainly making them weird. It's to the point where you're looking at data, you're looking at earnings, you're watching stock reactions, and you're sitting there going, I don't get this. Why is that? This makes no sense. And then the other thing that you've got to also factor into is you've never had more retail market participation in a market too. So there's just a lot of inputs going into this market that you've never had before. Where that takes us, I don't know. Now, what I will say is that anytime you've ever been at these crossroads in the past, without exception, the right answer virtually every time was to avoid the hysteria and buy the stuff that's getting thrown overboard. And so, that's the tact we're going to take. It's working so far. We're outpacing the market this year, we're only a month in, but that's encouraging. And like I've said before, there's a ton of value out there. I just think you're at a point where it's, owning the right thing and knowing what not to own, I think are almost equally important.
Well, I've always said you can't make money if you lose it all.
That's so true.
It's kind of simple. People want to reach out there. You want to get a risk review and sit down, chat with you guys about their portfolio. What's going on? What do they do?
Yeah, well, easiest way is go bulwarkcapitalmanagement.com, and we've got our virtual roadshow coming up next week. So you go to bulwarkcapitalmanagement.com, you'll get the box that pops up. You can sign on; it's free. We walk you through what we're looking at. We'll walk you through what we think is really important regarding the election that we just had, and then even if you don't want to be you and I are both finance geeks, so maybe there are a lot out there. But I was going to say, even if you don't want to be a client, we're going to show you some fascinating charts about divergences between valuations in different sectors. And, not going to draw conclusions, but just show the opportunities that we're seeing here, and then giving people a visual just to let them know how stretched we are. It's right now, for instance, consumer staples is trading at the biggest discount to the S&P 500 that we can find in history. Probably means there's some good buys. You know
That's
what I mean?
good.
Yeah. So, just walk through stuff like that. So yeah, go to bulwarkcapitalmanagement.com and not too hard to find us.
Right on, brother. You have yourself a good week. We'll do it again next week.
All right. Sounds good, Chad. Thanks as always.
Investment advisory services offered through Trek Financial LLC, an SEC-registered investment advisor. The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ. Investments involve risk and are not guaranteed. Past performance doesn't guarantee future results. Trek 24308.